Hi, I'm Jimmy. In this video, we're looking at Apple stock, ticker symbol AAPL, to see if we think that Apple stock is a good buy at the current price. We're going to start by going through some of the products and some of the product segments, and then we're going to try to value the stock in a somewhat unique way. And also, I'm super excited to announce that this is the first sponsored video I've ever done. Now, I've actually been approached quite a few times to do different sponsorships, but frankly, the products that they were pushing were they were terrible. But the sponsor of this video is actually the opposite of that. They're a simple, easy to use, free app that's right in line with what we do on this channel. So it's called Borsa Earnings Call, and it's a free app that lets us listen to earnings calls on the go. And just so we're all on the same page, an earnings call is a quarterly conference call where a company's management team discusses how the company performed in that particular quarter. And generally, at the end of each of these earnings calls, management will take questions from analysts, and I think that this can be a great place to find interesting information about any company that we're researching. So basically, this app makes listening to earnings calls as easy as listening to a podcast is. And personally, I like it because I now use it to listen to earnings calls on my way to and from the office. And to me, this makes it much simpler. I like listening to the earnings calls because it allows for me to hear the tone from a management team. And I think that makes the analysis all the more real. What are they excited about? What are they hesitant about? What are they just rushing through? What does not matter too much to them? I think that's easy to hear when you can hear the tone. Since it's free for us to download either on Android or iOS, to me, it makes a lot of sense to use. You'll find links in the description below to both of those apps, and no matter what platform we're using. Now, this app came in particularly handy with this Apple analysis, and we'll see why when we get to the valuation part of the analysis. So let's dive quickly into each segment, and then we'll try to come up with a fair value for Apple stock. So let's start with the iPhone segment, which was the largest segment back in 2018. Now, this is a chart for revenue just for the iPhone division going back to 2012. So we could see back in 2015, well, there was a nice jump thanks to the release of the iPhone 6S. Then we saw in 2018, for the first time, they topped the 2015 numbers. Now, from a business perspective, many analysts are expecting the 2019 numbers to be below the 2018 numbers. Now, this is important for us to consider because we want to try to determine the potential growth of iPhones. So I think it might make sense to try to look at some positives and negatives for the iPhone market and ultimately that impact on Apple's stock. Well, iPhones are expensive. I think we can all say that. But iPhone users tend to be very loyal. So what's happened is that iPhone users have extended how long they typically hold the average phone. So back when phones were largely subsidized by the wireless carriers like Verizon or AT&T, well, it was much easier for individual people to upgrade their phone every time a new iPhone came out. Now, with the way things are today, it costs individual users much more money to buy new phones. So ultimately what people are doing is holding their phone longer and then at some point upgrading once their phone gets old enough. In reaction to this longer upgrade cycle, Apple has started something called the Apple Trade-in program. So for example, if we had an older iPhone, let's say a 6S, well, instead of selling it on a site like Gazelle, where we might get, let's say, $100 for that phone, well, now we can go straight to Apple, and for that very same phone, we get something like $150. Now, Apple is also offering financing options when we were to upgrade our phones to try to get more people to switch over their phones. So in theory, this should keep revenue continuing to grow, and it's likely that we're going to see a spike whenever a new iPhone comes out that inspires more people to upgrade to that phone sooner. Now, this brings us over to the China market for iPhones. So iPhone saw a solid jump in the China market of about 42% in the month of July compared to July of last year. Now, this jump came after a 35% drop in the month of June in China. So I would expect to see continued volatility in the China market iPhone sales. And big picture, I think that overall, it seems to be heading in the right direction, although, again, we can expect some volatility there. Okay, now we're sliding over to the next largest segment. Here, we're looking at services. And when we jump over to services revenue, well, we can see that services revenue has grown quite impressively, and I wouldn't be surprised if we continue to see reasonable growth rates just like this for at least the next few years. So services include things like the iTunes Store, which can be accessed from computers, iPhones, iPads, Apple TV, things like that. You can stream, you can download music, TV shows, movies, podcasts, things along those lines. Now, Apple Arcade is right around the corner from launching, and I'm guessing they're going to have that revenue go into this category. And basically with Apple Arcade, what we're going to do is we're going to have the ability to sign up for a subscription fee. And with that, you could play all of the games that Apple puts out with no ads and no in-app purchases. Sounds interesting. And either way, I think that that could help spur this growth along further. Then they have Apple TV Plus, which is similar to Netflix, and that's likely to go into this whole category as well. That's another subscription service. And I'm expecting that to be an additional growth driver for this segment. This segment is looking good overall. Okay, back to the pie chart. Now, when we're jumping over to our next largest category, that's the Mac category. When we jump to Mac's revenue, well, here we might have guessed that Mac's revenue wouldn't look quite as good as some of the other segments. It's a much more mature segment than some of the other Apple's business lines. Now, they are still growing, so that's a strong thing for Apple. But again, it's not really doing a lot for their overall company growth rate and for Apple stock in general. And for those curious, the Mac segment is where they sell computers. Okay, back to the pie chart. Now we have the iPad segment and the wearables segment, and they both account for about 7% of 2018 revenue. So how about we start with the iPad segment, since that's the weaker of the two. This is their revenue going back to 2012, and we can see it's been declining recently. And it seems that people, as they're upgrading their phones, less people find it necessary to jump over and buy an iPad as well. But I think that ultimately, management is doing what they can to turn this segment around. They're trying to offer different incentives to get people to buy them. But I also think it's important that it's not like this is going to go away. I think that at some point this is going to stabilize, and the iPad segment contributes to, let's say, the services, since they're going to be on the iTunes store. The Apple Arcade is going to be available on iPads. So this is an important mix in the entire Apple ecosystem. Okay, on to the wearables revenue. So here we could see that wearables has been ramping up quite nicely in the past couple of years. This is where they sell things like the AirPods, the Apple Watch, the HomePod, and then they have some accessories that they sell as well. Now, you may remember at the start of the video that I mentioned that the sponsor of this video was Borsa earnings calls, and that was important for this particular video when it came to valuation. So let's shift over to valuation real quick. So when I was listening to the June Apple call on the app, well, Apple CEO Tim Cook came out and said that the wearables division, thanks to its fantastic growth, was almost the size of a Fortune 50 company. And that makes sense for us to update this chart with the last 12 months, since they've already completed the first 3 quarters of 2019. Well, when I heard Tim Cook say this, I thought to myself, well, I wonder what that company would be worth. And I began to wonder if it was possible for us to use a sum of the parts valuation technique for Apple stock based on all of their individual product segments. So let's give that a go. Okay, so we're going to try to come up with a weighted average price to earnings ratio for Apple stock. And we're going to use the S&P 500 as a sort of a benchmark for what the PE should be. Right now, the S&P 500 is 19x. And then if we look at Apple's own history, well, their historical PE average is about 16x. So that could be useful as well. So now when we look at the iPhone division, well, the iPhone division has dominated revenue for the past few years. So it makes sense based on the iPhone's growth, on the volatility in that growth, to try to value it somewhere near the overall market. And since that their revenue has dominated Apple's revenue, and Apple's only traded at an average of 16x, I don't think it can be quite as high as the market in general. So for me, I think it makes sense to apply an 18x multiple to the iPhone segment, assuming that they were a standalone business. Then for services, well, that should be way better than the market, since growth is so much better than the overall market. Now, Netflix has a very similar competing product, but they're trading at like 100x right now. I think it's more than 100x, and that's crazy. So we don't want to use anything like that. To me, I could easily make a case that a conservative number for this division, given its growth, would be about 25x. Also, given the potential growth of the new products that they're coming out with, I think 25x could easily be made as a conservative number. It's also true for wearables. If we look at the wearables revenue and the wearables revenue growth, it's easy to say 25x is very appropriate over there as well. So let's do that one there. Then for Mac, Well, I actually think that Mac is somewhat of a tricky one to do. I think that the revenue is going to continue to grow. And given that Macs tend to be premium products, I'm assuming that their profit margins are fairly good. Now, Apple doesn't break down all the profit margins as much as we could use for this type of exercises, but I think it's fairly obvious that Macs are going to be amongst their best margin producers. That being said, I think it would make sense to use something just shy of the 19x for the stock market, given slower growth but better margins. So if we were to use 18x there, I think that would be fair. Now, frankly, using 18x here makes me hesitate on the 18x that we're using for the iPhones, given the growth of iPhones. But if anything, we could just make the case that this is more conservative. iPhones aren't going to have as good of margins as the Macs are. So if anything, it's a bit conservative, and I'm okay with being conservative in this particular scenario. Then for iPad, well, here I think it makes sense, given their growth concerns, that they should definitely be below the market, and they should probably be below Apple's 5-year average as well. So how about we make them 15x? Now, if we simply multiply the percentage of their weighting by the multiple that we chose, so for iPhones, just as an example, it would be 56% times 18x, and we get 10.1x. Then we do that for each of the numbers, add them up, we end up with a weighted average PE of 19.6x. Now, over the past 12 months, Apple has earned about $11.74. And if we multiply that by 19.6x, well, we end up with a fair value of about $230 per share. Now, if we were to switch over to Apple's price chart, well, that would imply that the fair value is right up here. But what do you think? Do you think this is a good way to value Apple's stock? Were we too conservative or too aggressive with this method? One hesitation that I had was setting the PE according to the S&P 500 could be hazardous if we think that the S&P 500 is going to pull back in some sort of recession. Also, I think it's appropriate to look at Apple's business versus the market in general and think, do we think Apple deserves to be trading at a premium to the market? Personally, the 19.6x seems to make a lot of sense to me. I'm surprised that Apple is trading at a discount to the market in general. But what do you think? Do you think that makes the most sense? The other question is, what do you think of the Borsa earnings calls app? Is it something you're going to go over and download it? I got links to the Apple app and to the Android app in the description below. Jump over, support the sponsor. Thank you very much for sticking with me all the way to the end of the video. I'll see you in the next video. Thanks.